People are focusing on unit economics. It's important for people to have a clear path to profitability and growth at all costs. I think those days are numbered.
You're a shareholder of Mongo, right?
I am, yes, through a Union Square Ventures investment way back when.
So this can we call it a turn? I mean, is it a recent turn where the market seems now to be more focused on, as all of you I think have used these terms today, unit economics more than anything?
It is a recent turn, but it's episodic. I was the CFO at PayPal many years ago when we first went public. And
Part of the mafia.
Part of the mafia. And we raised $100 million in March of 2000 at a time the company had no revenue. And we did silly things because we had money in our pockets, and there wasn't a real focus on unit economics back in those days. And we had to get religion when the market dried up. And I think you may see something similar now where people need to focus on profitable growth.
You told our producer something really interesting. I want to read it for our viewers and then expand on it with all of you. Quote, "There's tension right now between the fear of missing out and the fear of looking stupid." Which is weighing more now on the scale? Which is winning out?
Fear of looking stupid is starting to weigh a little more heavily in that equation.
Yeah?
Oh,
as a result of WeWork and some of these other issues that we've had?
As a result of that, some of the other news today with what's happened at WAG as well, I think it's a real test to your resolve as an investor when you look at a business and other people are affording it very high valuations. The business seems to continue to raise money, but you don't quite understand it. And you check yourself, and you have a lot of self-doubt about your judgment. And so that leads to a fear of missing out. And I think people become momentum investors.
Yeah. Is there too much money sloshing around out here? We're just talking about Vision 2 is down the pike. You guys, obviously are huge players here.
I joined Sequoia in 2003, and I think at every limited partner meeting I've been at, we've said that there's too much money in Silicon Valley. So
in some respects, it's a good problem to have. But now we've literally seen valuations get pushed to the stratosphere when in reality they should never have been.
The key is to focus on the long run of the business. We partner very early with companies at the seed stage typically, and we help them as enduring business partners. We're actually involved with companies on average longer than a marriage lasts in America. So it's typically, I've been on the board of Square for a decade now, and we continue to hold our shares. So we look for the long run in all these businesses, and in the long run, the valuation will take care of itself.
I'm glad you brought up Square, because I hope you heard the conversation that we were having about the CEO, Mr. Dorsey, moving to Africa. Are you in favor of that? Should he go?
Jack is an incredible CEO, and when he informed us at Square that he was taking on the CEO job at Twitter again, we had a conversation about it, and Jack asked us a great question, which is, evaluate me on the results. And Jack has built phenomenal management teams at both businesses and has a great expression about companies have multiple founding moments. And these companies are both thriving because of his ability to build management teams. These companies are both worth north of $20 billion. It's incredible what he's done, so it's a little bit strange to me to see all the critique. And he's also a huge champion of remote work. And I don't think you need to be present physically in the office every day to be an incredibly effective CEO.
You don't think at some point he needs to make a decision, though? It's these businesses now are more mature than they were when he turned to you and the board and said, I'm thinking about doing both. This time's different than then.
I'm not sure that's the case. Both companies are flourishing. He's able to provide incredible vision and leadership and motivation, and he has fabulous management teams, and he's empowering them to help run great businesses.
The founder culture, I think, is a natural place to go next, and it seems to be under more scrutiny than ever. With what happened with Adam Neumann at WeWork, here we are talking about Jack Dorsey, and maybe it comes in cycles. Whereas, when the Google guys needed an adult in the room, you brought in Eric Schmidt. Then there was a return back to the founders. And are we finding ourselves again in a period where we need more adults in the room, so to speak?
I mean, Roloff used the term episodic about unit economics. It's the same thing with it was when Jeff Weiner and, I was running Twitter and he's running LinkedIn. You have this, it goes in waves. You need to bring in someone who's an operator to run the company and takes over from the founder. And then it sort of swings back to, no, only the founder who understands the original vision for the platform is the right person. It's funny. It just bounces back and forth out here. I think because of some of the things we've seen recently, probably with WeWork and others, you're going to see more of oh no, we need to go back to having a professional operator in the room. It's not just all about the founder. But it's sort of funny to people who are out here and have seen it happen 4 or 5 times. It really bounces back and forth.
Where do you come down on the issue of direct listing versus a traditional IPO? Obviously you were at Twitter, did a traditional IPO. Your new company, Virgin Galactic, just did a direct. You have companies in the pipeline that are going to have to make a decision, one versus the other. Is the pendulum starting to swing more towards direct listings, and will that be the trend of the future?
I think it's wonderful to see innovation in the listing process. I took a company public as a CFO in the traditional approach. It's imperfect. And I welcome the idea that there's innovation, that we can question some of the assumptions that brought us to where we are. But at the end of the day, what matters is the quality of the business you build. The companies we're involved with, whether it's Google or think about Square or MongoDB, more than 80% of the market value accrued after the IPO. And what really matters is, are they building a good business? And that was just a day in the life of the company.
I think the point that Bill Gurley from Benchmark made about direct listings when he was on the show recently was, look, the underwriters aren't really underwriters anymore. They're not putting any of their own money at risk. They're taking extraordinary fees for not putting any of their money to risk. And here's a way to stop that. So I'm kind of on the same page as Roloff as there's for sure room for innovation. The roadshow is a ridiculous process and should be improved upon. The roadshow a couple weeks before going public. And if direct listings are one way toward that, and some things like the long-term stock exchange, Eric Ries's new company, is another vehicle. I think those things are all great, and the more the merrier.
You let your actions obviously speak for themselves with the DL that you did.
Yep. Look, I think there's multiple ways to be successful. And so ultimately what's happened, to Roloff's point, is a ton of innovation in a space that had largely been stagnant for the last 10 years or so. I think it's a super compelling, direct listings I think are a super compelling way to go out. However, they have a drawback in that you don't raise primary capital for the company. It just goes out the door. And so the company itself doesn't raise capital as part of the process. So it's not for everybody. Most of the time, companies go public because they want to tap that capital access. The direct listing that we did is another interesting vehicle, partly because it does have some of the advantages of a direct listing and some of the advantages of a traditional IPO, in that Virgin Galactic raised a large amount of capital that they couldn't have done, say, through a direct.
You were an early investor in Airbnb, correct?
Correct. We met the founders. There were just the 3 of them. They had 1,000 listings at the time. It was still called Air, Bed and Breakfast, by the way. Now they have 7 million listings. So yes, it's been a while.
And should we expect a direct listing in 2020? Is that where we're heading?
Unfortunately, I can't comment on that.
Okay. Well, it certainly seems to be one of the things the company is considering in this maybe new way of going public.